We have these distinguished panels, these distinguished people who are going to talk about on this topic, that is AI and data in NBFC. And I would like to call on the stage, but just give us 2 minutes because we just want the chairs to come in. But before that, also I would like to take the names of the people to whom I would be calling up here on the dais. Mr. Rakesh Das, Chief Credit Officer, Tyger Capital. Mr. Darshit Seth, Chief Compliance Officer, GIC Housing Finance. Jephrin John Rinold P, Head Customer Experience, Geo Credit Limited. Mr. Pankaj Sharma, Chief Revenue Officer, Biz2X, and he is also a moderator. Ladies and gentlemen, can we have a huge round of applause for all these people who are going to be present here to share the views on, of course, the upcoming panel discussion that is on AI and data in NBFC. Ladies and gentlemen, please put your hands together to welcome Shri Rakesh ji, Mr. Darshit ji, Mr. Jephrin ji, Mr. Raj, Mr. Parvesh ji.
Good afternoon, ladies and gentlemen, and thank you so much for being present for this session right after lunch. Pleasant surprise to see such a strong gathering after lunch, so thanks for that. Well, the topic we have on hand is pretty interesting, and it's the buzzword everywhere: agentic AI, AI, generative AI, and especially in the NBFC segment. It's a huge buzzword where everyone is trying to explore possibilities, everyone is trying to find out ways to adopt agentic AI, considering that there are huge rate cuts that have happened in the past couple of quarters, assuming that this is also going to spur demand. And hence, to meet that kind of requirement and also to build a futuristic platform, I think every lender worth their salt is now looking at ways to adopt AI, data analytics, etc. Of course, you know, NBFCs have been using data analytics for donkey's ages, but I think agentic AI has taken usage of data analytics, alternate database scoring methodologies to the next level with the kind of efficiency that it brings in, helping scale up the loan book, preventing fraud, creating streamlined structures and processes. So I think we have a very esteemed panel today, and each of them is driving adoption of AI in their businesses. So they are right in the middle of thick and thin of agentic AI as well as data in NBFC. So let's start with today's discussion on AI and data in NBFC. My first question is to you, Jephrin. Since we are talking about agentic AI, AI in NBFC, it's a buzzword, like I said. Everyone wants to adopt it, everyone wants to do something about it. But it's my first-hand experience as well as a tech service provider, somebody who works with NBFCs, banks in implementing, agentic AI. It's been my experience also that while everything looks very rosy and very attractive when it comes to agentic AI, because the kind of use cases, interesting use cases it has, but when it comes to actually, walking the talk, the implementation part is not that easy, and there are huge challenges in terms of data, in terms of the way you're handling your data. Is the data clean enough? Is it structured enough? So would you like to throw some light on what are the key challenges in implementing and adopting agentic AI in lending?
Yeah, good afternoon, everyone. See, my view on implementation of agentic AI, right? First and foremost, it's a buzz which has come in very recently, right? It is not proved 100% that a decision made by an agentic AI is going to overpass the human touch over there. Three major challenges which I see is, one is on the regulatory per se, right? Because any which ways, even if an agentic AI is going to give you an output of any decision or anything, that might surpass few of the risk factors which will not overseen by a human eye, right? And it might have some risk factors which might go off from the agentic AI, the prompt which we have given, right? So from the practice point of view, this might be a fear factor for every NBFC because it is a regulated per se as well. Second part is on the responsibility, right? If a decision is made or given to a agentic AI completely, if something goes wrong, who's going to be responsible for it, right? The accountability is not where agentic AI can take. That needs a human touch over there. Though it can be used as a maker, the end of the day, checker should be a human over there. The third part is on the, as you said, the data part, right? Because even if you wanted to train an agentic AI, you need good amount of data to train it. If there is a lack in data, the more you train, or rather the data which you use to train the agentic AI, the outcome is going to be related to that, right? And the agentic AI is going to learn as it gives you the outputs. So till the time it gets, or rather it learns 100%, which is not proved yet, completely depending on agentic AI to implement in NBFCs is going to be a little challenge. Yes, down the line, after 2 years, 3 years, the scenarios might change, but yeah, currently the challenges still exist, in my view.
Great, that's a great insight, Jephrin. And since you talked about, using data in terms of agentic AI use cases, let me also quickly go to Rakesh. Rakesh, Jephrin talked about usage of data. Now, while a lot of conventional data and the data that you generate internally from your customer transactions, customer experiences is incorporated in training the agentic AI models, a lot of alternate data and other types of data, like, for example, GST, ITR, et cetera, is also used, in terms of decisioning using agentic AI. How do you see, usage of alternate database and database like, data like GST, ITR, et cetera, being used and deployed in training agentic AI models and their use cases?
I think, see, all the data that we use or people use are very useful in nature. You can build a 360-degree view of a customer. The challenge comes in when the customer is new to credit. That's where the majority, because in credit, typically you try to answer two things. One is his ability to pay and intention to pay. Ability to pay, if there are data set available, he is a banking customer, he is filing GST, ITR, easier to comprehend his ability. But the question comes in his intention if he or she doesn't have any credit history in past. That's where the challenge. Now, in past 5-6 years, we have seen or created a lot of models, predictive models, which typically deals with a lot of instance of defaults and the data which relates to their day-to-day habits, like your utility bills, your social media accounts, your phone data, the SMS scrapping, etc., etc. And that gives about 70-80% of the probability that the intention of a customer, you could judge 70 to 80% accuracy. I would say that right now our models are not so robust enough, especially for new to credit customer, to come to a very near prediction models. But I'm sure in next 2-3 years, because the adoption of UPI, adoption of GSTs are very rapid, things will definitely improve. But then the question is, are the people enough, intelligent enough to understand it and use it to the right perspective? Because everywhere, whenever you talk about efficiency, people talk about if we use AI, then what would be the role of people? I'm sure, one part of our discussion would have certain balance between human and the data set. So it's my view that 70-80% we are there. We still need to train our models to see the predictiveness.
Absolutely, very interesting point. And you touched upon NTC new to credit customers. I think that is one area also where agentic AI is playing a really meaningful role. And I have personally experienced, I've interacted with bankers where, very meaningful models are being built using agentic AI bot as far as underwriting is concerned for NTC customers, where in the absence of credit score and absence of long enough credit bureau history, interesting models where the agentic AI bot itself is doing a cohort analysis of the new applicant by identifying the similar cohort in the existing customer database of the banks, creating a peer comparison on various parameters like the performance in the portfolio, the risk profiling, etc., and then using that as an input in the underwriting. So I think the way agentic AI is actually addressing challenges, especially in the underserved segment, NTC segment, by creating alternate ways of underwriting and arriving at a more informed decision even in the absence of enough data. I think that is something very, very interesting. That takes me to my...
Just to add one thing, I think the major challenge remains wherein somebody who is not new to the credit, it's still easier to underwrite. The most difficult part is somebody who has just created a history of credit, because thanks to all consumer durable loans, you have a history of 6 months, 12 months, 18 months, and that's not good enough to underwrite a customer for 15 lakhs or 20 lakhs, because that's where the intention comes very handy.
Right, absolutely, and that's where,
In terms of challenge, I just thought we should add 2 more things, right? We always talk about just data, but if you look at workflow integration, if you read the recent MIT report as well, what does it say? Only 5% of all the use cases that we thought of in whether it's agentic AI or conventional AI have been successful. The problem has been that while you develop a use case, you write the story, you implement it, the issue is integrating those into the LOS and LMS workflows. That is where things fail. The other problem is that even, and especially in Indian enterprises, the way you measure the impact of AI is still in the traditional old school way. So how do we look at contact center productivity, for instance? How many calls does an agent handle, right? It's always based on volume and output. If you ask a team leader, the focus is how can you reduce handling time? Instead of focusing on how can I just eliminate this process? Why is there friction? So one of the big questions that we have to grapple with over the next few years is how do you really measure return on investment on agentic AI or conventional AI? It's not about volume per person, but it's about how frequently can I reuse that code?
Oh, absolutely.
What is my cycle time to delivery? Those are ROI parameters that have to come in.
No, absolutely, and I think you hit the nail on the head, because you also need to have a change of mindset before you really get into adopting something as advanced as AI. And I completely agree with you. I keep having discussions with a lot of NBFC founders, etc. And the first question is that, अच्छा अगर मैंने ले लिया, मेरी loan book कितने करोड़ से बढ़ जाएगी? How is my loan book going to scale up? That's the first question, and that's like jumping the guns, way too far. But coming back to basically how data can be used not just from underwriting perspective, not just from originations perspective, but also one very important area, which is fraud detection. Because as NBFCs try to scale up their business, they try to deploy more and more feet on street, etc. Along with that comes, frauds where there is collusion between the RM and the applicant, the DS and the applicant, and multiple such, fraudulent activities. How do you address that? And that question is, for Darshit. Darshit, I have a special question for you. Okay. So what do you think, how does AI impact fraud detection in your day-to-day lending? And is it just going to be a superficial fraud detection where it's just going to be an early warning signal or just some kind of a signal, or is it something that you can really rely on?
Thanks for the question. So, just going few decades back, frauds used to happen even at that point of time. It used to get detected without any presence of AIs or MLs. So my simple logic is that if you are aware of which business you are into, which product you are into, I'm very sure that you would be also aware that what are the loopholes or what are the areas where frauds can be committed. Now, introduction of AIs and MLs into the picture of detecting a fraud in the lending journey. Now, lending journey is not only an in-house journey of an organization. Lending is also done via DSAs, via DSTs. So fraud can take place even there. It cannot be restricted only to the in-house employees or in-house organization. So detecting a fraud in the lending journey is very, I would say, very challenging space, because in a lending journey, huge crores are involved, and also a fraud will take place and you will not come to know as soon as it takes place. So I have recently came to an example where I'm associated to a housing finance company where a fraud occurred, where a DSA was involved and a builder lobby was involved, and a loan was given to a customer. A customer was also part of that lobby. And then after a year or couple of years, we came to know that property itself was not in existence. So a loan was given on only on paper. There was no proper FI, or maybe an FI was done, but FI was done very conveniently to please the builder. And when these things come into limelight, it's very difficult to track and to trail, to find a trail of the funds, of the end use of the funds. So in a lending journey, fraud detection is a very important tool. And we are coming out, or rather the atmosphere is coming out with a lot of fraud detection tools, which are helping not only in a superficial way, but also in a very predictive and analytical point of view, where at each stage where a fraud can be done, we have a stopgap arrangement there. And to ensure that a fraud is not only taking place on the borrower front, but also on the employee front, because our employees also sometimes don't get into a very honest atmosphere and tend to occur a fraud. And there is a recent survey which was conducted by a very reputed organization, and they mentioned that almost 98% of the frauds, the big frauds which are being done across banks, NBFCs, there is always an involvement of the employees. So no fraud can be done without internal involvement. It has to be involvement from internal, as well as the external factors also does play a major role in it. Thank you. Thanks for this.
Great insights, Darshit. Thank you. My next question is to you, Pravash. Since we are talking about fraud, share your own experience. How do you think, AI ML models can rather further accelerate, fraud detection? How can you be a step ahead of the fraudsters, based on the experience that lenders have, in terms of fraud, recording those fraud instances, and then how can you use those patterns in your AI ML models to ensure that you're a step ahead of fraudsters?
Yeah, like, all these smart people here discussing about how can you use the AI to underwrite. Similarly, probably in another room, the fraudsters will also be discussing how can we use AI to create frauds, right? So it's everybody is now using AI, whether it is a banker, credit manager, or it is a fraudster. And so let's look at what are the items where people are doing frauds. One, primarily it is the identity theft, or impersonations. Lot of time they create fake IDs, they create fake invoices, they create fake bank statements, and all those can be identified. Now just most of these organizations earlier used to have certain rules, or those are rule-based fraud checking systems. Something like, somebody has availed 5 loans in the recent past, so you have to ban it, or this is probably this is another fraud. Somebody who has applied, or there are 3-4 credit checks which has happened in the recent past, probably you have to look at it. So a lot of things were happening, but at an organization level, everybody has a limited bandwidth to check that. If you want me to look at a bank statement, probably it will take me ages to look at or categorize each of the transactions. What are the way they are being spent, or this money is being spent. Accordingly, I have to take a decisions. Those are being very fast by using AI. So today, AI can actually, in a fraction of seconds, can search hundreds of parameters, create a whether it is algorithm or create a relationship between the transactions, between the identity documents, between other documents, and also give you the output saying ki is it relatively fraudulent customers or not. Similarly, today data is available everywhere. I mean, you talk about all the organizations, today things have been digitized, so you'll find the data. The way you are using the data is very, very critical. I mean, I can say, since beginning, while we were also a digital organizations, we created everything digitally. But 3 years back, we were only using 30% of our data, which can be usable on a AI model interpretations or creating ML models. I mean, that has improved significantly over the last 3 years. But creating data lake, and making those data used by your ML model or AI model is super critical. And that helps to identify those frauds. I mean, Ajay said, different types of frauds, whether transactional fraud, impersonation, document fraud, all those things can be checked. I mean, it has fast-tracked the entire process by using AI, which was not been able to, do that earlier.
I absolutely agree with you, Pravash. And in fact, you touched upon a very sensitive point about readiness of data and how we use data. And I think that's where, a lot of people face challenges, especially NBFCs and banks, where while everyone shows willingness to adopt AI, everyone wants to bear the fruits of and success and results from, using agentic AI. But the challenge is that, are we really ready with the kind of infrastructure that is required to adopt AI? And the moment this discovery happens that, okay, I'm just not ready for it, I don't have the right I don't have the right set of data, my data is not properly labeled, I don't have the clean data when the discovery happens. And when the time comes to invest in it, that you have to first set your data infrastructure right, and only post that you can probably even think of venturing into adopting agentic AI. I think that's where the cookie crumbles and people think that, all right, no, this is not something I want to do right now. I simply want to focus on sourcing more loans. I want to focus on hiring more RMs, feet on street, etc. So I think what we initially talked about, change of mindset, is what is going to drive this entire change and sort of first investing and then expecting ROI out of it. Well, that takes me to my next question, which is Raj. So we've seen that AI is being implemented across use cases, be it underwriting, fraud prevention, originations, etc. How do you think agentic AI can actually be adopted in call centers? It can be adopted at conversational AI and voice AI agents level in lending.
Thanks, Pankaj. See, first of all, this agentic AI itself, there is some redundancy in the terminology. Agentic is AI. You make frameworks behind it, right? And we are really jumping on to talking something like agentic AI before understanding complexities behind it. So let me just speak about customer experience. And I think conversational AI is something we are all talking about. And we have, and when we speak about what conversational AI offers, it's like a bazooka looking to kill a fly. I'll tell you why I say that. Because we thought that once conversational AI comes in, it'll replace agents. All sorts of inbound calls will start happening through conversational AI. But what we didn't realize is that there are three huge parts here. There is someone who's going to convert that speech into text. then that text transcription gets analyzed, you identify intent, you call an API, use an LLM to then understand how to respond, and then convert text into speech. And all of that means huge latencies. And it doesn't sound like a human conversation anymore. So then we realized that we could only use specific use cases like outbound. And what have you seen scale across the world? Largely outbound use cases. So we have seen them scale in collections. We have seen them scale to a limited extent on intent generation. Let's look at the other side. And I hear a lot of software vendors, independent software vendors approach NBFCs and banks to talk about how we can do agent assist with conversational AI. But think about it. You have an agent with about 6 to 12 months experience. How many times does that agent who answers 80% of the time repetitive queries will need a constant ping on his computer that, look, I have transcribed your call. I have understood what the customer wants. Here is what you should be saying. Can you imagine the amount of distraction that will be with a ticker going on his desktop all the time? It's pretty useless. But there are vendors trying to push real-time transcriptions, vendors trying to push real-time agent assist. I don't think that's going to work, right? However, what's going to work is if I'm able to, based on this continuous traffic of calls, right, understand conversations and datafy what I get. What is the customer saying? I'll take an example. Suddenly, aapka LMS phat gaya, your lead management system. You're not able to do refunds on time. Your statements are not showing updates. And you really have 1,000, 2,000, 3,000 more calls coming every hour. What do? Typically in contact centers, what happens is you start analyzing all this on the next day. Arey, ab pata chala ki something went wrong. Imagine if with conversational analytics, you have an anomaly detector and you have alerts going right in time to the team leader, to the product manager, to the business head. Someone works together, makes a ninja squad to solve the problem so that the call volume gets impacted then and there. Those are the sort of solutions we need to go after, right? So when I look at conversational AI, just to summarize, areas that we are seeing great revenue impact is outbound use cases, especially collections. Areas we are seeing limited impact is agent assist. However, areas that we will start to see impact, and let me talk about this edge use case. I don't know if some of you must have read about multimodal AI and everything coming in one box, right? So you have just one LLM trying to not only convert your speech to text, run an analytics and give an answer and convert that back to speech. All of that latencies that you saw in 3 different boxes come into one box, reduces latencies by several millionth of a second. That is something that will ensure that even in inbound calls, you will be able to give human-like interfaces. I think that's something we should watch out for as an edge use case.
Thank you so much, Raj. Great, realistic insights. And while we are talking about use cases in fraud prevention, underwriting, etc., we haven't talked about agentic AI use case in loan originations. Jephrin, my question to you is, do you think in first place, is there really a use case for agentic AI in loan originations? And do you think that it's a realistic one?
See, again, as Raj also said, right, creation of agentic is not going to be difficult, right? But integrating that with a LOS system or an LMS system to get the trigger happening on the right time for the right use case, that is one thing which we need to solve, right? Which we have not solved it yet. If we are able to solve that, I think that is when the responsibility comes in. What if agentic AI trained for X is, getting triggered for a Y, right? And it is going to hallucinate there. Who's going to be responsible for that? Who's going to take the accountability if a genuine customer is going to get rejected in my LOS during my BRE rule, right? So, my submission here would be using of agentic AI would be very, very good when it comes to a non-decision-making process rather than a decision-making process. A maker, again, can be an agentic, but using the output of the agentic, the decision has to be with the has to have a human touch, so that business doesn't get lost in wrong detections which happens through an agentic AI. That's my submission, yeah.
those words are going to be really soothing and going to work as balm to a lot of underwriters and credit managers sitting out here, that it's going to be a collaborative model rather than, one replacing the other. So thanks for that insight, Jephrin. Sorry, you want to add something?
No, just add to that, when we are talking about using agentic AI in loan origination, so it's definitely will add a lot of value because, originations happens where you have to collect a lot of data, right? And currently how it is happening, either it is happening manually, somebody is filling in the forms, somebody is filling in the Excel sheet or the web page for capturing those data. And many times for the small businesses or MSMEs where these are thin files, you do not have those data also. So what do? You go and ask a lot of questions to the customers, triangulate it and populate it in a manner the way you want it. Those can be automated and can be enriched a lot through the agentic AI. So till the time the AI agent is not convinced about those particular data points or he is not able to validate those data points, he will not leave the customers. Most of the time our relationship managers, not even credit managers, primarily the relationship managers and all who collect the data about the customers, whatever customer says, they fill it in, right? Who is going to validate those? So there comes the agentic AI, which can, validate those informations, capture the, real ones, and then there are other processes like, credit verifications, you're, going through the AI ML models, then approvals, rejections, whatever. So definitely for the origination, it is a must, and everybody is moving towards it.
Absolutely, and when you said how, conversational AI or agentic AI bot can actually help fill up questions, and that I'm feeling just compelled to share a first-hand experience where, I'm working with a couple of NBFCs where their key challenge and the problem statement was that their target audience, huge part of their target audience in terms of end borrower is based in tier 3, tier 4 towns who are kirana store owners, small business owners. A lot of them are not very tech savvy, and when it comes to a self-serve loan application journey, they either drop out in the middle of the journey or they face challenges, etc. So how do we solve that challenge? Just giving a very simple and quick self-serve journey is not enough because even that is not making them fill the application. So how do we address that challenge? And it was a very interesting solutioning which we did with them. It was a conversational AI use case where what we've done is that there's an agentic AI voice call which goes to the end borrower. There are questions which are asked pertaining to filling up a loan application. He just answers the questions. An application is getting filled in the back end. APIs are getting triggered to verify it. There is a BRE which is running in the back end, and an in-principle approval is given right over the call itself, and the acceptance of in-principle approval also happens over the call. Now, of course, there are going to be pros and cons to this. It's not that you can just completely depend on what has happened over the call, but at least you now have the customer's application. You've not lost that customer purely because there was a challenge in filling up the application. So NBFCs do have a huge appetite when it comes to innovation. It's just about change of mindset is what we are talking about, and these are some very interesting use cases which I have first-hand experience of in the market, and I'm sure this is going to catch up very fast.
Yeah, one point which I wanted to say is, as you said, the conversational way of onboarding a customer is going to give a very great impact, right? So even in one of our journeys, right, which we have, the loan against mutual fund, the onboarding journey is a chat-based journey. We do not have an application form. We do not have a physical visit or anything done. It's a chat-based journey which was giving a good experience, not only experience to the customer, but the ease of getting the customer onboarded. Whenever, the time he is chatting on the bot, every rules runs in the behind, and end of the day, he also gets good experience, and we, as a company, also get the good customers to come in with, right? In that case, it is a very good, solution for it.
Just want to come in there, Pankaj. So this is very interesting what both of you said. But in my experience, I thought if the user interface itself is not intuitive enough, is not simple enough, and then you bring a chatbot, right? In my experience, a chatbot then ends up becoming a barrier rather than a bridge. So if you look at a lot of our delivery apps, a lot of these e-commerce companies, you end up being in a bot loop. You get the same answers again and again. So I'm really surprised, and I would like to meet you offline to understand how you're using just a chatbot to complete an application. On the other hand, you look at the best applications today, like for example, Amazon or even Apple. What does the bot do? It just points you to the merchandise. Hey, do you have a problem with this merchandise? Excellent. What's your problem? Done. And a call comes back to you. So what does the bot do here? The bot here is becoming a bridge to a solution. Whereas in most cases, what we find is chatbots become barriers to a solution. So in my view, this is sort of counterintuitive, but I would love to catch up.
No, absolutely. And if you see, till a couple of years ago.
Just to answer his question, what you are talking about, you are primarily addressing the queries or the issues of the customers. Yeah, but what he was talking about is, when you do the form applications, most of these questions are, very specific answers are required. It is not, putting you to select a lot of things. That means it will ask you, for the loan journey, it will ask you write your name, then your PAN number, which demat account you hold, which, so it's a very systematic journey. So you don't actually need a, call center to come in.
No, and in fact, I concur with both Pravash and Raj. And Raj, in fact, you're right. Till a couple of years ago, and even now, you will see a lot of those service bots which are available. Ask Ria, ask Sia, ask Pia. Where you go and type a question, and if it is out of syllabus, Ria goes for lunch break or Sia goes for tea break, and then you keep waiting for the answer. So that happens, and I completely understand that if it's an out-of-syllabus question, if it's not hard-coded as a response, it just goes for a toss. But yes, things have changed. Very, very advanced models are coming in. But I completely agree with you. The efficacy of those models still remain to be tested because, these are very, very recent developments. Sorry, Rakesh.
More important is which segment you are working with. We have to keep in mind because like Apple, these are still my wife struggles to use Apple, right? But she is very well versed with Android. And there are many in this room also. So if you are working, if your target segments are tier 3, tier 4, tier 5, then using AI to your loan origination system, the objective has to be very different, wherein you ensure that the garbage doesn't come in and you verify each and every information that is required. If you are working in tier 1 and metros, then perhaps the assisted journey or a chatbot journey makes more sense. So that's the thing I wanted to add here.
Absolutely. Completely agree with you on that, Rakesh. And my next question is to you, Darshit. Now, I want to understand how does, AI-based fraud detection, how does it impact customer trust and transparency in the entire lending process, as well as post-disbursement in terms of servicing, managing the entire loan life cycle? How does it impact transparency and customer trust?
So, customer trust in terms of a lending journey, it's very sensitive area, and if it hampers, then I'm very sure that in his entire life, customer will not come back again to the same NBFC or a housing finance if the trust is hampered. So in terms of fraud, we ensure that if a fraud is happened to a borrower is anyway not responsible for any kind of fraud happened in his account. We ensure that we sensitize the borrower and we give him all the comfort and support in his difficult time. Having said that, we also ensure that any transaction done by a borrower in the done by the same borrower in the near future is being monitored by our expert team, and all the support is provided in that. When it comes to the customer expectation, I'm very sure customer would who is looking out for a loan will look for a quick turnaround. He or she will not be ready to wait for longer duration, because a loan is such a product that if availed on time and quickly, it will be used for whatever reason the loan is taken for. If a loan or a lending journey is too long, customer will not expect any fruitful output from it, and he or she will go to a different institution or a competitive institution or an organization. When it comes again to a fraud detection in terms of the customer expectation, there are few institutions on the street who ask for customers' private and sensitive information even before business is conducted with that customer, like the ITR statement, the bank statement. I understand all these has to be taken during the onboarding journey, but taking it from the customer before onboarding that customer is not a very mindful thing to do with the customer, because it will break his or her trust if a loan is not given to him or her after taking all these details and information. And I'm very sure that fraud detection goes hand in hand with customer comfort, expectation, and his trust, building on his trust. If the fraud detection is done in the rightful area at a right time and during the right frame of mind. So this is something which I feel should be adopted by all the organization when it comes to fraud detection and building on the customer trust and expectations in a right side of the table. Yeah. Thank you.
Great insights, Darshit. And in fact, it's just the trust and transparency which really encourages stickiness and brings in stickiness with customers. Completely agree with you. My quick question, another question for you, Rakesh, is that what do you think is an ideal balance between human judgment and AI innovation? Because it's a very tightrope balancing act. You see, maintaining that balance is something that one will have to master as you keep getting deep into AI.
It's a very good question, I would say. People ask that, agar aap toss jeetoge to batting karoge ya bowling karoge, right? So I think all of us understand that use of AI is to bring more efficiency and verify in a more appropriate way. Time should be lesser, more efficient, wherein human beings are to create empathy, creativity. And in absence of either of them will create a problem. So I don't see what is the level of balancing act that one has to do. But yeah, at least one thing I'm very sure that without human, AI doesn't have any value. And same is true, if AI is not there, then the customer experience, the fraudulent, so it is complementary in nature. I don't think we have reached to an answer wherein we say ki 50% human aspect, 50% AI, that's the right combination. Perhaps we need few more time to assess that. But yeah, one thing is for sure that without human, AI will not be survive, and without AI, human existence will be a question mark somewhere.
Yeah, just to add, at Arthan Finance, nearly 85% of our loans are underwritten basis the judgmental based assessment. Okay, and where every credit manager has its own way of looking at that particular case, and he either approve or rejects. But when we introduce machine learning models, it actually reduced a lot of inefficiency in the system. In this sense, most of these are data driven. Whenever BCM or the credit manager is taking a call, he understands what are the data he has to look into. Probably that was not there before the AI implementations. Now he has clear visibility of not only that particular case or the customer, but also how the entire portfolio is behaving in that particular segment, how the portfolio is behaving in that particular location at that momentarily, right? Which used to happen like, you create an IMIA, send it to the branches or credit manager, then they understand. But here, you know it exactly at that point in time how things are working, and that helps a lot, to take a decision.
Absolutely, very practical use
case.
Sorry,
Pankaj, it's a very controversial, juicy question, so I'm going to come in uninvited.
We have a devil's advocate. We have a devil's advocate between us, and I'm loving that. Yeah. Go ahead, Raj.
So the question, I don't know whether we are asking the right question. Empathy or no empathy? And think about it. Look at radiology as a field, for example. आप X-ray लेते हो. How many of you think that X-ray report and the diagnosis is actually written by a doctor anymore? A show of hands? Just one guy there. So everybody knows who writes that, right? So it's no more a binary. I mean, there are some jobs are going to be done by machines, and let's not debate that. On the other hand, let's talk about empathy, because my friend there spoke of empathy. I don't know if some of you read that ChatGPT is now replacing most therapists, right? And recently in the US, a child was led to suicide because his only therapist was ChatGPT. And by the way, on Meta's Claude, do you know which is the best-selling bot today? It's called Nasty Nancy, by the way. So it goes beyond therapy and empathy. Therefore, the questions that we need to ask are going to be very different, right? It's not about empathy or not. It's about clearly taking a call on what sort of use cases AI will fully take on, and what sort of use cases probably will collaborate. Yep.
No, absolutely. And I think we are at a stage where we are very fast evolving. So AI is, evolving. It's in an evolution stage. I don't think so, like Rakesh also said, and everyone else said, that we've not reached a stage where we can call out that this AI is bad and this AI is good. I think it's only going to evolve over a period of time. And I think after that, we'll probably be able to arrive at the conclusion what's good and what's bad for us. But, continuing on empathy, continuing on, human and AI collaboration, I also want to quickly ask you, Raj, what do you think, how do you think, humans and AI can collaborate? And, you've been very vocal about it. How do you think they can collaborate and still both the AI as well as human don't end up losing their real identity?
Yeah. Thank you, Pankaj. I'm going to give you a slightly long and not a straight answer here. Let's step back in history for a bit, right? When almost, I would say, more than a little around a century ago, the steam engine was invented. What did the steam engine do? It reduced distance. You were able to travel from A to B much faster. When you invented the loom, the textile mill, what did it do? It replaced physical labor, right? But what is AI doing? As a nation, we have moved from more of an agrarian economy, and most countries around the world, most societies around the world have moved from agrarian economies to services economy. And what's AI doing here? It's replacing a lot of thinking work, right? So the big challenge for states, governments, and societies is there is going to be job losses, number one. Number two, huge income inequalities. Given that there is so much concentration of power with hyperscalers. I mean, I don't know if you recently read, one of our petrol pump network companies called Nair had a tough time recently. You know why? Because they were using MS Office. And who controls MS Office? I mean, just an example, right? So there is so much concentration of power with few companies. So the big challenge in front of us as citizens, as probably a lot of leaders in the room, is to how to quickly reskill this huge educated talent that we have in our country and make them employable. Reskilling is going to be a big challenge. How are you going to tax and regulate AI so that you create a better and equitable society? So the question is not just about how we are going to collaborate with AI. AI is not some devil or giant there. It's still in our hands to ensure that we build unbiased LLMs, that we ensure that it is equitable distribution of disproportionate profits, and we create societies where youngsters alike, along with all of us, can work with AI. Yeah, that's a short answer.
No, fantastic, and that's a great philosophical view and empathetic view towards AI. I think we have just left about enough time to conclude what we've discussed today, and I think excellent insights from each one of you, and that was the minimal that I expected from all of you, considering this is such an esteemed panel. Well, I think it would be safe to say that it's only, probably only time will tell whether AI is a boon or whether it's a bane for us. Of course, we discussed various use cases of AI and agentic AI and data in lending. And lots of lenders, NBFCs, banks, everyone is benefiting out of various use cases which are getting implemented right now. But yes, like we said, we are still evolving. We'll have to wait and see where does this take us. Until then, the jury is out, and let's keep discussing. Cheers to NBFC. Thanks to everyone for being such a great audience. Thank you, panelists.
Thank you all. Thank you, sir. Thank you to all the speakers and all the delegates. And sir, I would request you to please be here for 1 minute. I would request Srijay Sridharanji, Director of Data Analysis, BFSI Analytics, and IoT Support, Altair, to please do the felicitation to all the honorable speakers over here. Ladies and gentlemen, can we hear a huge round of applause for Srijay Sridharan, sir? I would request Sridharan, sir, to felicitate Rakesh Das, sir. I would request you to felicitate Shri Darshit Sheth ji. I would request you to felicitate Mr. Jephrin John Renold P. I'll request you to felicitate Mr. Raj Nair ji. I would request you to felicitate Mr. Pankaj Sharma ji. Thank you, sir. Shri Pankaj Sharma ji.